I'm Akin with Indigo Marketing Agency, and thank you so much for joining us today. Today, I have a special guest, Marc Glickman with BuddyIns, and he is really a long-term care specialist. And he's going to cover everything today from, what's new in the long-term care landscape, what's working for advisors when it comes to marketing and selling long-term care policies, and how can you kind of get in front of more clients with this topic that is a little bit complex and a little bit different than the normal marketing you're doing for just general financial planning services. So welcome to the program, Marc. Thank you for joining me. And I will let you give a little bit of background on your company and your expertise.
Yeah, well, thanks for having me on. I'm really excited. Thanks for doing what you do in terms of educating people out there about both marketing, but also how to plan for these, complex and difficult topics. So as you mentioned, my name is Marc Glickman. My background is I'm an actuary, so I actually helped a lot of the insurance companies develop and price their products. But in that process, I learned and from some of the best long-term care insurance agents in the country and their marketing and their sales techniques. And I actually launched a company called BuddyIns, where we partner with advocates for long-term care planning, help connect them with top experts in long-term care insurance sales, and make sure the client has a great customer experience at the end of the day. So that's kind of our business model.
That's awesome. And so what we do at Indigo Marketing is we help advise our clients to get in front of more people with their services and their offerings. And a lot of times that is long-term care. And so Marc and I have kind of partnered together to figure out what works from a marketing perspective and, how do we help our clients get in front of more people. So Marc's team has a great suite of webinars that really are deeper dives on this long-term care planning topic with all of his expertise and his team's expertise. And so if you are a client of ours, you can work with us to use Marc's content and his webinars to get in front of more people from a long-term care perspective. And then in addition, he has a national network of specialists. So usually, high-value long-term care policies require a specialist, and his team is fantastic with working with individual advisors and their clients to create the perfect planning solutions. And so in the process of going through Marc's content and watching some of his webinars, I realized that this topic really is about telling personal stories, and that's, I think, the best way to connect with people. And through the personal stories, it was funny because I don't really think of myself as somebody who should be worried about long-term care. But when I was looking at your webinars, I was thinking, I have 2 little kids, the third one on the way any day now, and my parents are approaching their 80s. And so, I run a business, I'm busy, and you were talking about on your webinars about how people kind of get into this slippery slope of they start helping with their parents with some medical tasks, some other tasks, and then it kind of snowballs and they're busy and they start thinking, as their kids require more care and their parents require more care, generally the women start thinking about, should I sell my business? And all of those thoughts have crossed my mind. And so it was just very interesting, relating that to what actually happens in these human stories of these families. And I think that's the core of what we're trying to get to with the marketing, is help people think about it in a way that applies to them. And it's very powerful once you start thinking about how it might apply to your life and your financial future and all of that. And so Marc's content does an excellent job of helping your clients to picture how long-term care planning solutions can really secure their financial future for the sandwich generation, the in between, the children of your clients. And so great content on your webinars, and let's jump into our slides to kind of walk through what's happening and where the opportunities are. Great. So like I mentioned, we're going to talk about new marketing strategies for long-term care insurance in this post-COVID 2020 world. So let me do a quick introduction. I'm Akin. I run Indigo Marketing Agency. I am a former investment advisor representative with LPL Financial. I got into this industry because my dad's an investment advisor, and so I worked with him for several years before I started my own company to help advisors like my dad who are really busy running their business and serving their clients, and they just don't have time to do their marketing on their own. So we do everything from running their marketing, helping advisors do custom webinars, running their social media channels, really taking marketing off their plate so that they can have that seamless, cohesive marketing presence with a minimum investment of their time. And so I will jump over to Marc. And Marc, can you give us just a little bit more background on, why you're passionate about what you do and what brought you to start your company?
Yeah, thanks, Claire, for that introduction. And like you, my dad was a long-term care pioneer. He actually launched many of the carriers products that are in the market today. And what's really inspired me is there are so many great options for long-term care planning today. They're different than they were 10 or 20 or 30 years ago. And so there is a lack of awareness about some of the great solutions we have for clients. So I love doing marketing because it allows me to bring awareness and really help clients with something that's growing in demand, is the need for long-term care planning.
Absolutely. Great. And so give us just kind of a background of the long-term care landscape in 2020. What has changed? What's going on? How is coronavirus affecting this? And what is the latest and greatest?
Yeah, and I would say, it first starts, like you had mentioned, with the conversation with clients about what's your plan. It doesn't involve long-term care insurance from the outset. It involves getting people to understand what are the realities that they face or their parents might face when this event happens to them. From the perspective of what's happening with COVID, we're seeing more and more, news out there about what's happening in assisted living facilities and nursing homes in particular, and the fact that a lot of COVID is impacting them. And it's bringing awareness to the fact that people actually prefer to get care at home. And most long-term care insurance claims actually start off at home, about 75% of them. So when you talk to clients about this, their first instinct is to think long-term care is nursing home care, but the reality is actually quite different. It's actually to keep people out of the nursing home. And in that respect, it actually fits very well with what consumers want today and how COVID's impacting the facilities.
Yeah, and it's scary. We have one of my dad's clients that we were about to move into a nursing home on April 1st, but with COVID, we paused that and kept her in her home. And certainly glad that we did that, because it's terrifying to, have these people be in these facilities where the infection just goes right through them and there's not much you can do. And so definitely a new awareness of having the care that you need in the way that you need it, and using these solutions to craft a plan that really works for you. So where are you seeing the big opportunities for advisors to get in front of new clients and sell more policies?
Yeah, and I'll tell you this, it's happening everywhere. It's hard not to see long-term care planning as a need in whatever audience you look at. Whether you're talking to high net worth business owners, whether you're talking to people that are, you're getting from employers or different situations like that. I think people are becoming more and more aware of it naturally, sadly, because the number of caregivers out there is growing. One estimate says that there are 50 million unpaid family caregivers taking care of a loved one for long-term care today. That's 1 out of every 6 adults is actually a caregiver themselves. And so I know a lot of people listening to this, that will resonate with them because they may be taking care of somebody. And so the opportunity is in having the conversation. The great thing for advisors is it's really a planning conversation, and it fits right into the other types of planning that you're doing for your clients. So if you're able to help them solve the long-term care situation, get a plan into place, find a financial solution that works for them, that opens up the trust and opens up the door to being able to interact with them for their investments or their life insurance needs or any other number of other financial concerns that they have. So to me, long-term care can be one of the best door openers because you're addressing a real problem that a lot of people face today.
Absolutely. Yeah. And I love the paradox that you kind of talk about of, people start doing, typically it's a gradual decline of somebody. I mean, obviously there's events that cause somebody to need long-term care suddenly, but I think more often than not, it's a gradual thing. And so, children start doing small things and then they get to the point where they're doing larger things and their standard of care is, too high, or they believe that nobody else could care for their parents in the way that they do. So they're unwilling to give up that role. Yet it's a tremendous role that probably should be delegated to a healthcare professional. And so, looking for these opportunities and trying to get people to address, and realize this tendency is really important, not only, for the planning opportunity, but the quality of life of your clients and your clients' children, and making sure everything is done in the way that it should be done. And so it's definitely a delicate topic. Talk to us about, when approaching this delicate topic that's very personal and involves all these kind of interdependencies and family relationships, what are the common mistakes advisors make when trying to market long-term care?
I think they assume that long-term care is just one thing. And I think, as you pointed out very well just now, it's a very personal topic that's very customized to the particular person you're talking to. it may actually turn out that a person's family member may be the best caregiver for them. While in the majority of cases, they may not be trained to do that, they may have other commitments, and it may not make sense. Even if the person had somebody in their family that might provide care, the insurance could be a supplement to provide that person respite or provide professional expertise in certain areas. So you still may be funding it. It's not an all or nothing solution. And I think that's probably the biggest thing that I see out there is most advisors have some kind of common perception about what long-term care is or isn't, whether they think it's just for nursing home versus home health care, whether they think it's just traditional long-term care versus a life insurance hybrid solution. All of those different tools come into place when you start talking to clients and you start to figure out what their true needs are. So each conversation is like an individualized consultation, and it needs to be treated as such. And for that reason, we actually partner with top long-term care specialists that offer a variety of different solutions. And the reason for that is you don't know what the right solution is until you assess, what a particular person's plan, what they'd like it to be.
Yeah, that's a great point. Yeah, and so, going back, and I'm just going to go back to the slide because I have a question here of, a lot of times you have advisors who have done policies in the past, maybe it was 5 years ago, maybe it was 7 years ago. Is there room to upsell, or is there room to readdress the policies that they've already sold? And what has really changed in the past 5 years that advisors need to be aware of the policies available today versus, the availability of what was around 5 years ago?
Yeah, I will say that with long-term care insurance, what somebody already owns typically is their best solution. It's not always, but I would say 98% of the time, it's their best solution. What happened in the past and what a lot of people hear about with long-term care insurance is the past products, the carriers underpriced them. They're requiring rate increases now. And so there's this tendency to say, well, should I be looking for something different? Should I replace my policy? The bottom line is that original deal that they got is probably the best value possible for them, both because of that original underpricing, but also because they bought it at a younger age when the rates obviously are going to be relatively less expensive and when people can qualify health-wise for that solution. Sometimes it makes sense to supplement it with additional coverage. If they weren't fully protected initially, it may make sense. Or if they reduce their benefits because of a rate increase, it may make sense to supplement or complement that plan. But I rarely advise, and you don't see it happening very often in practice, people drop their policies or replace their existing coverage.
Great, that's good to know. And so, maybe you have a client that, looked into some options 5 years ago, but now the need is more obvious and more urgent for them. Are there big differences in the type of policies available now that advisors should be aware of?
Yeah, there's a lot more, call it different options. So you have about 5 or 6 different types of products that provide long-term care coverage in some way, shape, or form. There are still the traditional options, and they're still very good. Even though they're more expensive relative to the benefits that they used to be, you're still getting a lot more quote-unquote insurance leverage for your dollar than usually self-funding or even some of the other alternative long-term care solutions out there on the market. I think that's a misperception. Long-term care isn't expensive. People are just reducing the amount of benefits they're buying to their budget, to their affordability, and focusing on affordability is important for clients. But now you have options in the life insurance world where there are long-term care riders, and the plans that are used most commonly by the long-term care specialists are the ones where even once you use your life insurance benefit, it provides you an extension of coverage, and therefore it's also creating that extra quote-unquote insurance leverage that the traditional products have. And I see them lining up side by side, and really the choice for a particular client is based on their particular preferences. Some people like kind of the term insurance model, if you will, where if I put this money into it, I'm not expecting to get a return back, but I'm going to get the most bang for my buck. And a lot of those, there's also other tax advantages to traditional long-term care. And so that more fits like almost that client's term life insurance mentality. Then there are clients that really prefer to have the hybrid approach where the worst that they can do is get at least their principal back in most cases. And if they need care, they're still going to get a lot of leverage, but it's almost like a hedge. And so there's a lot of clients that prefer that approach because, again, it just feels like the opportunity cost that they're missing out on isn't very much. Because of today's low interest rates, it'd be hard to self-fund, in that way anyway. Those also have guaranteed premiums, and that can help with clients who are concerned about potential future rate increases on the traditional products. So those are the two main categories that we look at for people that are in really good health. Typically, about 80 to 90% of people will qualify for those types of policies if they plan early enough in life, typically between the ages of 40 and 65. And then we have 3 or 4 other types of options, especially for people that have health issues. In certain states, there's something called short-term care, which, again, just like they sound, have a limited duration to the benefits, which is why the insurance companies are comfortable offering that to people that have health issues, as well as annuities with long-term care riders are also prevalent, again, in that marketplace where people have health issues. And there's also some other, I'll call it tax-advantaged opportunities in those spaces. So the hard part about the market today for advisors is you have to know probably 4 or 5 different types of products, and within those products, multiple carriers. And if you're not doing long-term care full-time, it's very difficult to keep up the speed so that you can offer the right solution, when the client situation comes up.
Right, yeah, and so that goes back to the power of working with a specialist and somebody who can really help support getting your clients the best outcome and winning the case for you. And that's certainly something Marc's group provides. So let's switch gears a little bit to examples of marketing strategies that are working for advisors. What do you see as a way for advisors to get in front of new people, or to get in front of their existing network with this topic?
Yeah, and I will say that long-term care marketing is very similar to other relationship-based marketing that you already do. So in particular, long-term care is about sharing stories, and it's about building a relationship with the client and really about trust. And those are the most successful cases that we see, is when the client kind of has implicit trust that the advisor is looking for their best interest, and therefore you're having a collaborative conversation and you're figuring out that the right customized solution. So from that perspective, we do a lot of videos. And that's because we like to have the advisor on camera talking about their personal story so their client can see it and understand why they're so passionate about it. We do a lot of webinars like this where we educate clients. And we spend a lot of time on the educational aspects because that really enhances both the trust, but also takes away a lot of the time that you might spend on a one-on-one conversation with that education. By the time the client gets into the meeting with their advisor and with their long-term care specialist, they already know what to expect. They are educated on the topic, and therefore you can spend most of that time doing that one-on-one consultation as opposed to talking about some of the basics. So our marketing is really about spending time educating people in more of a productive, efficient way.
That's great. Yeah. And I'm a big fan of webinars. I know you are too. But for our advisors out there, this is a great opportunity to be able to use a webinar, maybe something Marc's team has created, to share it with your clients, educate them, and help kind of shake down that interest. By using a webinar that you don't have to create yourself, by basically doing a guest webinar on your site. So if you're a current client of ours, let me know and we will add that to your calendar. Or if you need help with your marketing, get in touch with our team and we can show you how we run your marketing for you, incorporating some of these partnership opportunities. And so, Marc, tell us a little bit about the power of personal stories and how you use them through your marketing.
Yeah, I mean, almost every advisor and specialist we work with, we do a one-on-one personal video with them where I'm interviewing them on a TV show called The Insurance Experts. And the primary purpose of that is for them to share why they believe in long-term care planning. And usually we also share anonymously a client story so people can relate to it. Some of the most powerful stories you see are not coming from the advisor or insurance industry. They're actually coming from other industries that are affected by this. Claire, I sent you an example that really resonated with me, and we actually play this live on our consumer webinars of a Gillette shaving commercial ad, which is called Assisted Shaving, and they developed a razor just for people that are taking care of other people. And it's from the perspective of the caregiver, and you see the sandwich generation in it. You see the 3 generations there, the kids, the person who's the caregiver, and the person that needs the care. And it's just the most really emotional story you could imagine, but it really gets to the point in like 3 minutes as to what this is all about, and it really draws people in to want to have that conversation with you.
Yeah, and it really is in marketing. This topic is all about personal stories and getting people to realize that it's not something that you hear about that you maybe need in the future or someone else needs. It's when you apply it to your own life, you start thinking, wow, this is an important topic that I'm going to have to address at some point. And so I will link this video below. It's really powerful. Take a moment to watch it as soon as the webinar is over. I will link it right below so you can click on it to review. So let's talk about care, caregiving, and caregivers, and kind of this topic. I'll let you give us an overview on this.
Yeah, and I would say almost every conversation starts with this topic. When I share my personal story, out of my 4 grandparents, 2 of them needed care out of our home when I was in high school, and I watched my mom for over 5 years take care of each of her parents, and I watched the effect on my mom's health. And that's, where I became aware of long-term care. But until years later, when I was in the industry, I really didn't connect it, that there was a solution to this, and that we could have paid for care, and that could have really helped my mom out at that point in time. On my dad's side, his parents owned a life insurance agency. They bought long-term care insurance for themselves through the business. They were able to take a tax deduction on the premiums they spent, and they received the benefits when they went on claim for a couple of years each later in life. And that home care provider became kind of a part of our family. And so I saw the effect of insurance. I saw the effect of not having insurance. But what it comes down to is, what's your personal story? How do these 3 words on the screen impact you and impact your clients? Care, caregiving, caregivers. And if that conversation starts in that direction, so when you start getting into the financial aspects, it puts into context why you're spending this money. And again, then you can start focusing on some of the other aspects we'll talk about today about making it affordable and getting a plan in place.
Right, that's right. Yeah, so tell us about the different options, especially now nobody wants to go to a hospital or a care facility or a nursing home. Those are some of the most dangerous places in our communities right now. So talk to us about where care can take place.
Yeah, and I will say that this is a constantly evolving landscape. Long-term care insurance covers you if you need care at home from a licensed provider. If you need a family member to take care of you, there are policies that will actually pay cash and pay for informal care in that way. They also covers assisted living facilities, and you have to remember, 30 years ago, assisted living facilities really didn't exist the way they do now. So the policies that were originally designed 30 years ago are very different from the policies today. Now assisted living facilities are paid for a lot more often out of the insurance policies. In fact, almost every comprehensive policy covers them. And then nursing homes are still relevant because at the end of life, when people need round-the-clock care, they need doctors on staff, they need durable medical equipment. It still makes sense oftentimes to have people in the nursing home, but usually that's the last year or 2 of life, at most. So it's a spectrum now. It's not any one location. You're also seeing different options popping up with continuing care retirement communities offering these different levels of care, from independent living to assisted living to ultimately needing round-the-clock care, being in one location. And so people are starting to plan out, what does my retirement look like? And if they're not staying at home, sometimes they're going into one of these kind of prepaid situations where they know exactly what their retirement to look like. So once you start asking those questions, not only do you figure out more about their financial planning needs, but you also start to put into place, okay, how do we best provide for the care you might need at that stage in life?
Yeah, that's great. And so this topic is funny, the impact on women, because I never considered this. I just never put the dots together when thinking about long-term care. But I live a mile from my parents, and they're getting older. Luckily, they're in pretty good health, but they're starting to need help with, some things that I'm a mile away, and my brother happens to live over on the coast at the beach, and he's about 40 minutes away. So it's just far enough that they're not going to call him. And so I'm kind of in this position where I get phone calls to help them out, or to, take them to their, doctor's appointments or minor surgeries, et cetera. And so let's talk about the impact on women, on the daughters usually, and what takes place there.
Yeah, this is really a lot about a women's issue for 2 reasons. One, as you pointed out, the caregivers are oftentimes the daughters or maybe even the spouses, the wives of people impacted by care, but also because the women actually are the ones that need care the most often. They're living longer, and they're the ones that oftentimes, if you ever have visited a nursing home, probably look around, probably 90% of the people in there are women. So they're actually the ones receiving care. So both on the provider side as well as on the needing care side, it's impacting women. And for that reason, I think when you're talking to clients, you're oftentimes going to get a better audience with the wife in the couple, for example. It resonates more with her because she's the one that's going to be impacted more. And so you have to kind of focus on both sides, making sure that the need for planning is established, because if the wife says, I really need to get this in place, then oftentimes the husband will come along with it. So it's very important that you engage with it, and that may also fit into other types of transition planning you're doing, because oftentimes, of course, the women are the ones that inherit some of the larger estates for some of the clients you're working with, and you can kind of marry those two things together, so you're really building that relationship across multiple generations.
Yeah. Yeah. And I think there's a certain, risk aversion that women typically have that sometimes men don't have. If women want to get this nailed down and they want to have a policy and a plan, and that can be an ally for the advisor who is looking for that urgency to get the clients to, make a considerable investment in this.
Yeah, that's
So
a great point, Claire, about it's almost evolutionary, about women really being sometimes the risk manager in the family. And that's also why insurance resonates a lot with women.
yeah, absolutely. So talk to us about, long-term care, just being about planning in general and kind of these stages of care that people go through that they need to plan ahead for.
Yeah, so the first thing is not to say, you need to buy insurance. The first thing to talk about is what's your plan. And everyone's going to be impacted by long-term care, at some point if they live, especially a longer life. And of course, life expectancies today, people are living well into their 80s, 90s, or even 100s. And when you get to those ages, it almost becomes an inevitable conversation. So what you want to do is first establish what are the things that you need in place? What are the key documents you need? What do you have written out for the families so that they know what your wishes are, right? Because a lot of times long-term care can actually destroy families because the kids spend time fighting about how to take care of mom and dad. Or one of the kids lives on the West Coast and the others live on the East Coast, and the one that's nearby their parents are the ones that bear the brunt of the responsibility. And they become kind of angry at the other siblings for not contributing as much to it. So a lot of those kind of disasters can be avoided by pre-planning, establishing this is what we all agreed to, documenting it, and then figuring out, does it make sense to finance this, to fund this? And that's where the insurance comes in. So it starts off with a planning conversation, but it ends up figuring out what's the optimal way to fund this. And then that's where you can see whether insurance will fit in and how to do it. Maybe it's actually a supplement to your self-funding plan. It's not an either or conversation. Oftentimes those things fit, lockstep together.
That's great. Absolutely. Yeah. So tell us a little bit more about, creating a plan to, especially for, I know a lot of older clients worry that their kids are going to fight about money once they're gone, but this is certainly something that kids can fight about while they're still here. And so talk to us about how, this planning does help to keep families together and to, have harmony and what some of the benefits are there.
Yeah, I mean, the reality of this is that if you don't have the plan in place, the first thing that usually happens if if there's a married couple, for example, is the spouse is the one that starts providing the primary care. Well, it doesn't always make sense for that to happen, especially if the spouse is of a similar age, right? Let's say you're 80 years old and your spouse is also about 80 years old. Can they really provide those tasks to take care of the loved one? So what will happen is the kids start to become aware of this when they visit for Thanksgiving, and all of a sudden they're seeing that things aren't the same as what they remembered growing up, right? It's very disorganized household. There's maybe some odd smells coming about, things like that. The reality is of this, and that starts to clue them in. There may be something wrong with this picture. And so when you're having that conversation, you want to do it before it becomes an issue. You don't want to have to react to the crisis at hand. So really it's about starting off by having a conversation about what are we going to do in the event of this. Usually mom or dad is quite willing to have the conversation as long as you're proactive about it. And then later on you can avoid those things we just talked about with having infighting amongst the siblings. Or let's say that the mom or dad is a widow and they're the only one left, thinking about who's going to care for them before it becomes a situation that spirals out of control.
Yeah, that's a great point. So we talk about long-term care insurance and not only about financing, the freedom of the children that may become caregivers, but also financing health. So tell us a little bit more about this idea.
Yeah, so the first thing to realize about long-term care insurance is it's a pretty efficient market today, meaning that there are carriers that will offer you extremely great value, but only if the client is pre-planning, meaning that your health kind of buys you the coverage or gets you into that exclusive club where you can access the best coverage. The good thing about it is generally most people between 40 and 65 can qualify for it. The bad thing about it is by the time they realize that they need that insurance is an option because no one's ever brought it up to them proactively before, is oftentimes right after they've had a health issue. And that's the worst time to be looking into it, right? So really the key is first about health to assess. Let's do this in advance. Let's try to qualify for the best options that look at it. And then the second part of it is the most of the time, the number one reason that people are not buying long-term care insurance is because they perceive that it's too expensive. And yet there are plans out there that I see routinely that may cost $100 or $200 a month, especially when you're planning early. So if you can establish what budget do you want to set aside to pre-fund this effectively, almost like you're saving up in a 401k plan for your retirement. You're saving up in this long-term care insurance vehicle for when you might need it. And the benefits grow quite a bit over time. You can both address the health issue by avoiding it, doing it before the health becomes an issue, and then also address the financing by figuring out how much do we want to budget for this, getting a plan in place. And that very first plan, as we've talked about, is probably the one that's going to deliver the most value. You can always decide later on to supplement or add it to it or make it flexible in terms of having cash values in it where you can decide what to do later. But starting off by figuring out your best options financially is usually the right approach.
That's great. Yeah. And it reminds me of college planning. So my dad, as a financial advisor, requires that we do a lump sum for each of the children that we're having the day they're born, because it's so much easier if you do it way in advance, and then you don't have to contribute very much each month. And by the time they're 18, their college is funded. And so it's good to think about it well in advance to lower that cost. And one of the articles that we do at Indigo Marketing Agency for our clients is this story of 3 long-term care policies. And so it has 3 different people in 3 completely different situations, where one of them has very low monthly costs to fund their long-term care way in advance. One of them is kind of your average, and one of them is somebody who waited too late. And so that helps people to see, where they are in that story and that progression, and to give them realistic numbers of what it might cost, which may be a lot less than they think. And so it's important to get them to think about it in a realistic way and get them to start thinking, how can they fit it into their budget before it's too late?
Absolutely.
Yeah, so talk to us about funding a plan and some of the options available there.
So once you figure out the budget, there's a lot of different ways to finance it. Obviously, you can do it out of after-tax money, just like you would buy any other type of insurance. But there's also opportunities, for example, to use the business checkbook to fund a plan. And by that, I mean, if you have a business pay for long-term care insurance, both with traditional as well as with certain hybrid policies, you're able to actually have the business pay the premium. You can do it exclusively for the business owner and for their spouse, and take a tax deduction on the amounts they spend as a business expense. And so that can be almost a subsidized way of doing long-term care planning. We see a lot of advisors doing that for themselves in their own practice, because oftentimes they own their own businesses. And even when you take a deduction like that, the government typically allows you to still receive the benefits tax-free. So there's a lot of different funding vehicles. You can use HSA dollars pre-tax to fund long-term care. Sometimes, though, once you identify that funding option, it becomes very clear what the optimal plan is in terms of the insurance, in terms of how much you want to spend on it based on what that funding vehicle might provide, and get someone comfortable that they're not necessarily spending this out of other income that they need, retirement income, but they're really moving money from one pocket to the other to cover this future expense that they might have.
That's an excellent point. I have so many of my advisor clients who focus on business owners. And so this could be a really great opportunity to approach your business owners with another great idea that can help them, build wealth in an efficient way. And also to potentially start the conversation with business owners that you don't already have a relationship with, have you thought about funding your long-term care through your business? And becoming a specialist in that area lends itself to all of these marketing campaigns that we help execute. So I think that's a great point, and certainly something advisors can think about including into their marketing plan. And so we talked a little bit about health buying you coverage. Tell us a little bit more about, when is the right time to make this move?
Yeah, I mean, the reason it makes sense to buy it as early as possible is generally because of health. Even though we talk about that, you can also maybe save some money by buying it younger because the prices might be less expensive when you're younger. That's not the biggest motivating driver. The biggest motivating driver is you want to have access to all of your options. We talked about that there's 5 or 6 different categories of products that are available to you, but probably the top 2 that provide the most insurance bang for the buck are going to be only available if you're proactive about it. The other thing about buying it younger is that you have more time to accumulate benefits for when you're older, meaning that most of the top policies have the ability, escalators built into them to increase the benefits with inflation protection. And the cost of care goes up much faster than normal inflation today because of the fact that there's a shortage of both caregivers as well as facilities out there, especially the good ones. So this is key to plan early, both because of health advisory coverage and also because of the financial aspects of accumulating money over time. You got to start early, just like when you're saving in your 401k plan.
That's right, yeah. So is there a cutoff of how young is too young? You mentioned 40 to 65. I mean, do you see business owners in their 40s funding long-term care from their business?
I do all the time. In fact, I'm working on several cases right now with people in their 40s. It's actually probably an optimal time today to do it because you just don't run into health issues as often. I see people in their 30s planning for it. Again, they typically know a little bit more about their retirement plans. They may be more financially well off to do it, that way. So it's a more limited marketplace from that perspective. But 50s is most common. The average age today of somebody who's a business owner that buys long-term care insurance is around 55. And then a lot of people kind of wait just pre-retirement, until they're 60 to 65. So it's not too late to do it at that point in time, but the earlier you can start the conversation, the better. Plus the conversation, sometimes it takes a period of years. Sometimes you begin the conversation, the clients, it's not the right time for them for some reason, but then you come back to it later. Maybe they've just had a personal experience. Again, when you're in your mid 50s, it's very common that you're dealing with issues with your parents and taking care of them. So that's when the awareness starts to build up from that perspective. But starting it early means that you're going to be the advisor they come back to when the issue might percolate a few years down the road. So even if it doesn't end up in a plan today, that's not the ultimate objective. The ultimate objective is to make sure that person gets a plan before it's too late for them.
Right, yeah, and it's just such a long sales cycle. I mean, everything in financial services is a long sales cycle, but especially this product. And so that's why it's important to build it into your marketing calendar on a regular basis, at least once a year, because you want your clients and everyone in your network to see you as an expert on this topic and to start thinking about it. And so when they have a need, when something happens, when they feel that urgency, you're the person that they're going to think of, and you're the person that they're going to turn to. So let's talk about the value of insurance leverage for long-term care planning.
Yeah, and my background is as an actuary, so I'm really a numbers guy. And for that reason, when I talk to advisors out there, I know a lot of you folks out there are also numbers people. And what it comes down to is, am I getting value from this insurance policy? If you're not getting as much what I call insurance leverage, and we'll talk about that in a second, you may actually buy less coverage and you'll self-fund the rest of it, but it doesn't mean that you won't even do insurance at all. Sometimes those first dollars that the insurance company pays out and some of the ancillary planning benefits within are worth buying, kind of what I call foundational plan, maybe more limited coverage. But the objective is to try to get as much in terms of your benefits at the most likely point in claim, that you expect to have happen for that particular person relative to the premiums they put in. It's actually fairly simple to do an analysis if you run an illustration. What are the total premiums that you expect them to pay on one side? What is the total amount of benefits in terms of that pool of benefits that they'll receive? And how much do they get per day or per month when the benefits start to kick in? And if you look at the total benefits and you divide it by the total premiums, with some policies you may see 5 times leverage. With some policies you might see 20 times leverage. And there's a wide range. But oftentimes when you compare that to self-funding in a safe type of investment vehicle, oftentimes the insurance will really shine side by side. But by focusing on that value proposition, it gives you much better insight into, is this worth doing? And that's what clients will be thinking about as well. Am I better off buying the insurance or not buying the insurance? And sometimes that financial value will really be the thing that convinces them to move forward.
Yeah, yeah. And so give us as an expert, you work on tons of these cases. What are your tips and tricks for getting the best deal for advisors' clients?
So really the key to begin with is figuring out, what's the cost of care in your particular area and what makes sense from a funding perspective. How much can a client afford? And based on those two parameters, what I would recommend is shopping the market, showing the best traditional option and the best life insurance hybrid option for people that can help qualify for them, and then comparing that insurance leverage side by side. What you'll typically see with couples in today's market, traditional plans make a lot of sense because they have certain features like shared benefits, which allows you to kind of maximize the benefits in the policies. And the insurance company is not paying for the guaranteed return, which usually translates into getting more insurance leverage. On the other hand, we usually couple that and pair that side by side with a hybrid style vehicle. Typically, you'll get less insurance leverage, but now you're getting the guaranteed premiums, and you're going to get oftentimes a return of whatever you put into it. So once you show the clients those side by sides, it becomes very clear which model they prefer and which one you prefer to recommend to your client. And then usually the client actually almost chooses their policy through that mechanism. You know, once you get a sense of asking questions and their responses to those questions, it starts to point in one particular direction. So believe it or not, as you go through that sales process, you can identify the best solution almost with them choosing it off the shelf for you.
Okay, perfect. And then the cost of care, I mean, we touched on this a little bit, but generally give us, your updates and the latest on the cost of care.
So as I mentioned a little bit earlier, the cost of care today continues to go much higher than the cost of regular inflation in the economy. So typically we're seeing that the increases in the cost of care is about 3 to 5% per year. And for that reason, it's important to not only know what you're getting them in terms of coverage today, but what does that coverage look like 30 years from now? And when you compare that side by side with the cost of care, you want them to come roughly in lockstep with each other. But the key is when it matters most to that client, what benefits are they going to receive at that point in time? That's really what you're targeting. So when you're looking at an illustration, I would say look at the age 80 or age 85 row of that illustration and just focus on those numbers. Compare that to the cost of care. And there's some great surveys online that are free. I'll mention one, the Genworth cost of care survey. If you Google search that, it has a great little calculator that you can project it out, gives you an idea. But keep in mind that you don't have to buy the full cost of care. And that's one of the biggest mistakes I see being made by advisors out there, is this presumption that 100% of the cost needs to be covered. Most people today are buying a fraction of that. They're buying 25, 50, 75% of the cost of care. And even if the client's going to pay the other 50%, they're not going to be upset that they have this policy kicking in. In fact, if they need the coverage, it's going to be worth whatever they put into it in almost every case if they use those benefits. So I wouldn't focus as much on the cost of care, but be cognizant of it so you can decide what not to overinsure somebody, but also how much is the right level for someone's particular needs and budget.
Right, and from a marketing standpoint, we do a lot of articles on the cost of care in your individual state or in your individual area. So if you're interested in, doing an article for your clients on the cost of care in your zip code, that's something that we provide to our clients because people really want to know. They're curious, what is the cost of care? How is it changing? And that's kind of the information that gets a lot of clicks and a lot of interest for our clients. So let's address just some of the most common misconceptions about this topic, and I'll let you kind of run with this.
Yeah, and there's a laundry list of them, and that's what makes long-term care planning more complex and so difficult. Is being able to confidently address a lot of these topics, and that's again why specialists who work in this full-time are helpful. We talked about a number of them today. Nursing home, this is not nursing home care. This is care oftentimes to keep people out of the nursing home and get the right type of care at home. That's one big one. The fact that Medicare or the government doesn't really pay for this. A lot of people assume that their health insurance is paid for by the government, and long-term care, while it's treated like health insurance, it's specifically excluded from Medicare to a large degree. So the only place that you get to get coverage from the government is once you spend all your assets and you can qualify for Medicaid, which is really a program for the poor, and it's an option of last resort. So really there is nothing in place yet to protect against it. It's an important misconception. The fact that people think long-term care insurance is too expensive, when in fact there are plans that are available, like I said, $100, $200, $300 a month for a lot of families that can be quite affordable. It's the fact that oftentimes, that's not the particular solution that the agent or advisor is aware of or comfortable with, and therefore it's oftentimes not offered. The fact that there are these tax deductions available, I will tell you that a lot of people that bought long-term care insurance that own businesses never even took their tax deduction, even though all you have to do is make it so that the business is either reimbursing you or paying for the coverage, and that tax deduction you don't have to give back. So there's almost no downside to doing it. But talking to business owners and being able to say that you have this tax subsidized way of doing this oftentimes is what is needed to move them along the way. So we could go on and on with a lot of misconceptions, but don't just take for granted what you hear out there, even if you're hearing it from sources repeatedly or the media. A lot of times you really have to be in the weeds every day with this industry to understand what the truth is out there.
That's great. And I think all of the things that you just mentioned would make a great marketing article about common misconceptions about long-term care, what people, truths and myths. And so if you're a client of ours, let me know if you want to add that to your marketing calendar. I think that would be a really interesting piece of content to get out to your network. And so just a couple to close out kind of strategies for getting to new prospects with long-term care. What do you suggest? Is it inviting them to a webinar? Is it approaching them with specific ideas for funding through their business? What are your recommendations here?
Yeah, I mean, there's no one silver bullet answer, but I would say being proactive is one thing. Giving your clients opportunities to both meet with you or with a specialist, but also to attend events when they may not be ready to want to have a one-on-one conversation. You give them multiple outlets to be educated about this. One of the great things about marketing today, as Claire can attest to, is there's a lot of analytics available, meaning that you can see when someone's actually clicked on your emails, viewed your videos, attended your webinars, and because of that, you can actually isolate the prospects that are going to be the ones that are most interested. And when you reach out to them, and that outreach is still very important as part of your marketing and sales process, but when you do reach out to them, they actually have a warm response to you. It's not a cold call anymore. You're not introducing a topic that's unfamiliar to them. And so if you have a large enough list and you're doing enough of this marketing activity, you'll actually be able to target the types of prospects that are going to be interested in your message right then and there.
Yeah, absolutely. I agree. And so we talked a lot about why we're working with a specialist, but how easy is it to get in touch with a specialist for, specific cases, and at what point should an advisor engage the specialist?
Yeah, it's a good question. And it's one of the reasons we created BuddyINS, www.buddyins.com. That website was really built around this concept of it's not easy to identify who's really a long-term care specialist, because a lot of agents claim that they offer all the different solutions. The key is, do they do it full time? And are they familiar with all the different carriers' products? And are they well versed in a lot of the topics that we talked about today? And only those people that are doing a fair number of cases every single day really are the ones that I would say I would call quote unquote specialists in this. So that's the key, is really understanding that, interviewing them. And we have the advisors we work with actually interview the specialists they're going to work with. We already pre-vet them to know that they meet all of those high standards that we have, that they're plugged into our system, and so we follow up and hold them accountable for how they're working with clients, and keep everybody in the loop on those things. But from your perspective as an advisor, make sure you ask them the tough questions, and you're the barometer for the client. And if it doesn't seem like their answers, they're up to speed on everything that you're asking, you probably should look for somebody else that is. And there are several hundred people, maybe 1,000 people out there that qualify, but again, they're spread out around the country. There are fewer of them today than there used to be. So it's important that you have at least a resource out there that you can trust.
Right, absolutely. And so let's just talk about, how people can learn more. And so, like I said, if you're a current client of Indigo Marketing and you want to add some of these topics to your calendar, or you want to market to your existing network using a webinar, like one of Marc's webinars, just get in touch and we'll set that up. If you need help with your marketing, get in touch and we can create your marketing calendar and do your marketing for you going forward on all topics, not just long-term care. But how can they learn more about your webinars, your support, and your specialist network, Marc?
Yeah, the best way to do it is to go to www.buddyins.com. And at the top in the navigation bar, you'll see partner opportunities. Just click on that and you can either put in your name into a quick form, or you can book a meeting with me directly. And I'm happy to have a call with you anytime. And we can chat some more about where this might fit into your practice, or even just give you advice on clients you're working with today and what might be the right solution for them. So feel free to take advantage of that. We love to help people out there with this need, and our mission is really to help prevent this from being a catastrophe in the future, and to save all those future family caregivers from having to do this if it's not really their choice to want to do. So let us help you with that mission. And again, thanks so much for having me on, Claire.
Thank you so much for all of your insight. I hope this was valuable for the advisors watching. Thanks for joining us. And I will link all of the different links to learn more, get started, and watch the videos we mentioned below. Thanks, and we'll talk to you soon.